almost here. Another day on the markets, approached with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating, educational, financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity. Nope, complexity into clarity with shouted adrenaline. Boom, messed up the intro. Today, we have an exhilarating lineup of segments to give you all as much information as quickly as possible as per usual. So today, obviously, we're going to do some live trading and market analysis, but we have two new segments I want to share with you guys. We have This Week in Dumb Money, and we also have what I like to call the Earnings Rewind. So we're going to do these two segments where we're going to focus on what people are doing and maybe what they should or shouldn't be doing, what they're doing right or wrong. Thus the dumb money tag. And, for privacy reasons, hiding names, all that stuff, don't want to, poo-poo on anyone. It's just a matter of what we can learn from other people's mistakes is what I want to share with you guys too, how you can learn from my mistakes. So kind of focusing on what people are doing right and wrong in the whole retail community and what to look for there. And then what I'm excited for is our Earning Rewind segment. So obviously last night Microsoft reported earnings and they blew it out of the water. And I'll be the first to say I was wrong. I took a educated bet on the downside move on Microsoft, where I had a good 4-to-1 risk to reward. It didn't work out, and that's sometimes how the cookie crumbles. But I am happy that they really blew it out of the water. So we have a segment called Earnings Rewind. We're going to take everything from the earnings call, the report, condense it down into a nice little 10-minute chunk of information for you. That way you know what to look out for, as they are now the second $4 trillion company, I believe. So they just breached that, at least if they open in this general area. Microsoft is now a $4 trillion company, joining that rarefied air that it now shares with NVIDIA. So very, 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 very interesting. Really excited to talk about that some more. But before we get too deep into the market, let's take a look at our Catalyst Watch to get an idea of what to look out for on the day-to-day. So especially if you're a day trader, you want to be conscientious of any news news that's coming down the pike today, or potential news, or as I like to call them, landmines. You want to step on a landmine, you might get blown up, right? So let's take a peek. As it pertains to news, we're not really seeing too much, at least pre-market here. We do have a White House press briefing at 1 o'clock, and then Trump's going to sign some executive orders at market close. And also at market close today, you got Amazon and Apple reporting earnings. So keep that in the back of your mind if you are someone who's leveraged via the Mag 7s or anything like that. Obviously, huge earnings tonight, so you want to be conscientious of that. And that's something we'll also talk about a little bit later in the show. All right, so let's also take a peek at... I do want to share one thing before we get too deep into the show, real quick. All right, we're going to try out this new thing here. Cool, it worked. All right, so here's screen share. And we're going to need this today for the segment that we're sharing. But here's a tweet I put out. So if you don't, or a post. If you don't follow me on X, you should, because I put out this little, this message here. And actually, let's look at this one first. Where... I sent this message out on Monday, and you can go fact check my work, and I've even talked about it on the program, but I didn't expect UVXY to pass 15.5 pre-FOMC, so I'm expecting volatility to get pinned. I was also expecting VVIX to sit around 90, where it did bump up to 95, so as I talked about yesterday, it wasn't like the end of the world, but I also expected VIX to stay under. Basically, it's a wider range with 17 to 17.75, but mainly that 17.5 to 17.75 area. And as long as the market stayed under that area with a drawdown, so the market came down and volatility popped at the same time and it stayed under that area, then that could be seen as a buy the dip, or BTFD, so buy the blank dip, opportunity for the market. And I capitalized on that yesterday. So we saw yesterday, if we flip back to my other screen here, we'll go to the VIX. And we saw yesterday on the VIX that we peaked at 17.27. So we started getting into that range, and we noticed that right around here, things started to peter out in terms of volatility. So I was watching the SPY like a hawk. Consequently, we go over here to the SPY, and this is the 1 minute. And right around that same time, here, let's get the timestamp here. So 1502 to 1507, so roughly around 3 o'clock. And 1502 to 1507. So 1502 right here, 1507 right around here. This is where the market started to build some level of a base or a bottom. So this isn't where I necessarily took the long, though. I was waiting to see if the market could kind of stabilize into the close. So I was waiting to see if volatility was going to continue to decay. And basically, this was my long trigger right around here. Well, a little bit earlier than that. I was expecting it to break. Right around here, around that 1546-ish time. And you saw here 1546, which is right around my entry, and we'll go back to that screenshot in a second. I got in on SPY 0 DTE calls at 66 cents, and I sold them at my price target right around here, this old LOI at 1634 for 169% gain. Now, I'm not gloating, but I'm trying to make a point of saying I try to share information with you guys that can help you trade and make life a little bit easier. If I put it on social media, it's to help you and make your life easier. So if you aren't following me on X, make sure you follow me on X, because I typically only tweet things that are of any sort of importance or anything like that. Let's see where my timestamp's right. Yeah, 349. So that was my entry. Let's go back here. And where's 349? 349 is right here on this red candle. This boy right here. So ended up working really well. And again, not gloating, but making a point of saying I try to give you guys those kinds of examples. That way you guys can hopefully execute your own trades as well. I don't want people just to follow me and do what I say, but it's a matter of I want you guys to learn on your own and build something for yourself and make your own plays, your own trades, etc., and grow further beyond following people on X and following people on Instagram, whatever, and eventually get to the point where you see these things yourself. Also, good morning, Negum. If you guys don't know, say hi in the chat. I'll say hi back. And good morning, Josie. Sorry if I'm saying your name wrong, but good morning, Josie. Thank you for enjoying the stream. Appreciate the kind words. And if you haven't already, I am now streaming basically everywhere. We're on YouTube, we're on X, we're on Instagram, Twitch and Kick. TikTok hates me, so we're not on TikTok, but we're on all those places. So wherever you are, I'm going to ask you twice a stream. I'm going to ask you once now. I'll ask you once again towards the end. Do me a favor. Please interact with the stream. Like, subscribe, share, follow, comment, whatever it is. The algorithm loves when you do something, anything at all, and I appreciate the roughly 50 of you that are watching right now. That number tends to ramp up into the open, so I would appreciate you guys do a quick little take a second, take the phone out of your pocket, or if you're watching on your computer screen, hit the like button, whatever it is. Your support means a lot to me. I know I don't have a very big audience, but when you guys come here, it shows me that you guys really want me to continue doing this. And remember, if you haven't subscribed to me over on YouTube, once we crack 500 subscribers on YouTube, this will be an every single day show. So if you like the content and you want to see more, please do me a favor, interact with the stream. That's the cheap plug. It's out of the way. We're only going to do it one more time this show, so don't forget. If you could interact, I greatly appreciate it. I appreciate all 50 or 100 technically of your eyeballs and your ears listening, and hopefully you can find value in the program. Now, obviously, SPY is opening up near, or going to be a new all-time high. Kind of trending down after the pre-market open, but not necessarily anything like to cry or worry about, mainly due to Microsoft and Meta blowing it out of the water. And again, don't forget, later in the show today, we're going to do an earnings rewind on Microsoft. So we're going to look at what they said last night and really dig into the earnings a little bit more and try to give you a condensed version of what you need to know if you're someone who is long-term interested in Microsoft. So we're going to focus on that. But basically, both companies blew it out of the water. I was very impressed with both their earnings calls. More Microsoft than Meta, and we'll talk about that. But the cloud segment was very impressive versus what the street was expecting. Now, don't forget today also, we do have Apple reporting after hours. We also have Amazon reporting after hours. Amazon's almost up 3% in the open here, getting a little bit of a shot down here in the open. But both are reporting after hours. Once the market opens, we'll give you a little bit of an insight into their earnings report later today. And like I said, we did a news perspective, and I know more people are joining, so I'm just recapping a little bit. We don't really have many news catalysts for the day. Not too much is really going on. Again, we just have a White House briefing at 1, which things could be said, so you want to at least be mindful of that, and Trump at 4 o'clock at market close. So really going to be a quiet day in terms of news catalysts, and really the big thing to watch out for is going to be Apple and Amazon at the close. Right now, we've got about 2 minutes until market opens. So we'll see how we push up here. Nice little gap up on the market. About $1, $2. Looking like about $1 right now, higher than that old all-time high. So it's very possible we come back and back test that old all-time high from 2 days ago into this open. Obviously, the Qs are pushing here, new all-time high on the Qs as well in pre-market. And the laggard, IWM, underperforming. Remember the tattoo level, as I've been saying, and if you're new to the program, 223.32 is the only level that matters on IWM. Above that, you're bullish. Below that, you're bearish. It's that simple. I don't love this volume on IWM yesterday. I don't love that we closed under it, and I don't love that we're opening lower. I am an IWM bull near term, and I think the most opportunity lies in IWM, as I shared on the program, and I have a whole video about how I believe SPY will get to 700, and part of that is through the participation of the Russell. So, although this doesn't look fantastic at this point in time, after some level of cool-off here, as long as it can sustain this zone here above the 0.618 and above the 0.65 retracement here, also known as the golden pocket, there is a good chance that this still continues some level of a rally as we cool down here on the daily, with the weekly uptrend still sustainable, I would say. So we'll check in on that as the day goes on and see where things lie. Alrighty, we've got about 30 seconds or so into the open. So we're going to watch SPY, and then we're going to flip over to all of our sectors like we normally do, kind of see where the money's flowing today, get an idea. Obviously, tech is going to have a lot of inflow today, so just be mindful of that. Not that it's a bad thing by any means. Wow, I just noticed NVIDIA's up 2% in the pre-market. Wowee, let's see. The new all-time high? Gonna gap up to a new all-time high on NVIDIA. Wow. I made a joke and I said it was going to hit 200 before the ER. Actually, I think I originally said before fall. And then I guess fall is, they're reporting on August 27th, so I guess that would be technically before fall. But I think it's really in the cards here, and I know it sounds crazy, but I think NVIDIA is going to just, if Apple, mainly if Apple crushes it, it's just going to be more inflow for NVIDIA more than likely. And this thing's going to go to 200 before earnings, which is crazy to think about, honestly. Very crazy. I think that puts them in the $6 trillion category at that point. Right? What are they right now? 4.4 trillion. It's closer to 5, but 5 and change. But that puts them in a brand new category. Ooh, just got an alert set off for PLTK. Did they have earnings? Ooh, we're in my buy zone on PLTK. This is one I brought up on the program quite a while ago. This is where I was considering it good risk. It's got the support here at 4.35. Now, you do have earnings coming up on the 7th next week, but risking essentially about $4, so you got about 3% downside here. I'm going to look into this one a bit later. It's got a decent base here. This is the lows where I wanted to consider a stab on it. So I'm going to circle back to this one probably before the end of the program. This is one that I think if you like a medium cap company in an interesting space being mobile games, could be something to consider. So I'm going to circle back to that. Market just opened, so let's focus on that for now. Okay, as I said, market opened at a new all-time high, getting a little bit of a sell here. Not really too crazy when you think about it. People are more than likely taking profit off of this rally. We'll check in on Microsoft real quick. Yep. And Meta, obviously. People are going to be taking profits, so you see this go down. Not necessarily a bear thing, but you still just want to be careful in general. Google moving down as well. Actually, Google's pretty sharp right now. 2% on the open. Apple dropping a bit here. Tesla pretty, nothing too crazy there. All right, looks like our Mag 7 are just dropping at the moment, right at the open. Can you imagine if Meta and Microsoft went red? They had this massive gap up, decent earnings thing, just drops red. It would be absurd. It'd be absurd. Now, because now Microsoft is in the $4 trillion club. Officially, right at this price, this puts us at the or technically I think it's the open, right around this area. We're at the $4 trillion club now. So it joins that, again, that rarefied air with NVIDIA. Man, we are just dumping out the gate. Strong gap up, obviously, on tech here, but tech definitely getting some people selling here. Definitely getting, I would call it profit taking. We'll check in on a little bit, see how that looks. Here's that rotation. I talk about this on this program quite a bit, and we're seeing IWM and the Qs inverse each other a lot of days, where when people take profit from the Qs, money inflow tends to go to IWM, at least as of late. This isn't always the case, but recently we're seeing a lot of, divergence between these two indexes. So it's something you want to keep on your radar and see if that trend continues. Interesting. All right, let's check out our sectors real quick, see where the strength and the weakness could be in the market. Alrighty, utilities right now pretty flat, down 0.3%. Energy flat. I mean, it was down much more, but it's pushing up a little bit. Consumer staples pretty flat, or I should say down 0.5%. It's not necessarily flat. But I mean flat on the open. It's not really moving too much of anywhere. Tech, again, obviously selling off as we saw with our Mag 7 stocks. XLRE down 0.3%, so that's your real estate. Materials open lower, now trying to grind higher, so trying to get some bullishness out of your materials here. Industrials are actually flat, they're down 1%, or up 1%, so that is flat. Healthcare open lower, this is actually taking not a decent hit on the day, open down 0.7%, trying to grind up to the upside here. Here's banks. Technically flat on the day, open lower, now sitting pretty flat on the day. This is where I talked about in the program a while ago, where I think there could be opportunity longer term in banks if we can get a sustained break over basically 53.25. We haven't really had that, but if we can get that break, you should see some level of strength come through in your finances. I should say your financial sector. Consumer discretionary obviously had a push up because you had Tesla looking green and Amazon was up about 3% pre-market. So pre-market looking up, now moving lower. And XOI is largely Amazon and Tesla, so that's pretty obvious why we're seeing that move there. Comm services is the strength today. Big strength on comm services, up 1.7%. Big move on the XLC today. About a buck off of all-time highs here, $1.50 on XLC. Very good to see with XLC. Now I'm curious. Okay, that didn't move. The only other thing I opened yesterday, and I talked about this in the program too, that's why I wanted to speak about it real quick, is I opened up a GameStop long, utilizing this block of support down here. So 2186. You got that 0.786 retracement here at 2208, and then 2210 is another LOI of support. So I actually sold some 22.5 puts for, I want to say 45 cents or something like that, 47 cents. And now technically the puts are down, but my gain is up. So they're now worth 29 cents. So that's working out well. And I opened up some long equity, basically risking the low of this candle here. I gave a little bit of wiggle room, but the low of this candle, 21.54. So you're risking about $1 drawdown, and if you're super patient, And obviously it's a meme name, so if you don't like it, you don't like it, that's fine. If you're super patient, essentially looking for this gap fill, conservatively, I'm looking for 25.39 on GameStop. And that basically puts it right here at a risk to reward ratio of 3-to-1. So I'm risking about a 4% drawdown for a 13% upside on equity. So pretty solid. And I added a little bit of juice there with the puts I sold at around 40 something cents, whatever it was. Currently those are worth 25, so those are up almost 50% overnight. Love to see it. Back to the segment, or back to the sectors. Let's see where everything is. Yeah, not looking like a very strong open. Qs are pushing lower. And again, divergence here between IWM and the Qs. Love to see IWM somehow get back over our tattoo level of 22.32. A little bit of a far cry on the daily, or intraday I should say, but I would prefer to see that happen if I could have my way. Meta is trying to actually build a new base up here at its new comfy, insanely high gap up and new all-time high. Now sitting 12% in green on the daily candle. Looking at Microsoft, not as good. Microsoft is pushing lower. Will my call credit spread still work? Probably not. It's probably toast. But if Magnus goes red and you just have a giant death candle, that would be crazy. Now, like I said, their earnings are actually really good, and I'm okay with taking the loss in the trade. It was a calculated bet, but their earnings were pretty good. So I'm penning it as profit taking. I'd be impressed if it got down 40 points or 30 points at this point, all the way down to here. It would be very impressive to see that kind of fall on Microsoft, giving it all back, which that'd be a hell of a candle. To give that all back would be a hell of a candle. But it's actually not really too uncommon. If we look at their last earnings, they had this massive gap up. And again, more profit taking. Look at this daily candle. Ugly, right? Not great. And then it just grinded up. So if we have a similar looking candle, maybe I'd consider a long. Who knows? I mean, you're at all-time highs. And we'll talk about this again in the earnings rewind. That's going to come up in about 7 minutes or so, where Microsoft's evaluation is very lofty. And so are a lot of these tech companies. And that's not necessarily a bear thing. And I want to make that abundantly clear because I know I've got a lot of new viewers watching right now. On this program, I talk about things that are risk on and risk off. We don't talk about things that are necessarily bull or bear. And if I do, I'll overtly say, this is bullish, this is bearish. But I like to talk about things from a risk perspective because then you can make a more calculated opinion on what you're looking at. Part of the risk on Microsoft is its evaluation up here is very lofty and growth needs to continue going. Now, growth was very, very good on their earnings report. The question is it sustainable? And I think that's why you're seeing some profit taking here, not to mention it gapped up, whatever it was, 50 points, insane gap up as well. So, it's not insane to see it get some level of a sell-off here into the open. So if you're a bull, you're going to want to see it obviously push higher. I'd want to see over 550 today as a bull on Microsoft to sustain some level or a decent amount of that ER push that we're seeing here. Meta just rocking and rolling, new all-time high on Meta. Is 800 in the cards for Meta today? I bet you the options chain's betting on it. Let's see what the volume is. Yeah, so volume on the 800 calls today, 16K. Open interest, 10K. Now, obviously, people could be selling. Still, highly volatile. Wow, look at this number change. This is just at $5. It just dropped to $4. The volatility is absurd. Wow. Interesting. Not something I personally want to touch, but hey, God bless you if you're doing it. Just be careful. Make smart decisions. SPY finding some sort of support here around this 638.40. Wick, and testing right now. The Qs are not looking too great. They're trying to get a reversal in. And IWM coming down. We could have some level of a bearish day today. And by bearish, I mean in trend. I don't mean necessarily that we're going to finish red and things are continuing to go down. But we might see at least the open trend a little lower here off these gap ups, which IWM could be a victim of. We're still seeing volatility, all things considered, mostly suppressed. The VIX is trading at 15 or 1530. As long as it stays sub 17, this is a buy the dip market, at least through the next OPEX. This is going to be a buy the dip market as long as we're staying sub 17. Again, the extent of that is if we quickly move up to 17.5 or 17.75 and then get a quick reversal, which is kind of what you got here. You broke 17, quick move up, and then came back down. These are 1 minute candles to get an idea of how quick that move is. Very quickly bumped up and then came down. So as long as you're staying sub 17, this market will be a buy the dip market until August. You can put that feather in your cap and smoke it, whatever the phrase is. That's what you want to look out for. Updates on PRGO. TD Burn wants to know. Let's take a peek. So we talked about this one on the program. They got earnings coming up next week. Had a really solid setup here for a flat top breakout here. Did kind of get a failed breakout, and this is kind of something I have a lot of interest in general. Now, to be clear, my stop on this one is down here at, what was it, 2640? So we're near my stop, but you got POC here in the 50 MA. So when I trade a flat top breakout, this is one of the things I look for. So see a wick here, wick here, wick here, rejection. This orange line is your flat top, by the way, when you zoom out here. Had the break, and it did not follow through. This lack of follow through, sometimes, I guess I could equate it to people who trade Wyckoff. They call it a spring, right? A liquidity sweep, so to speak. And as long as, in this case, the 50 MA holds, we're not making a lower low here, and we're holding this POC, which is that green dotted line, 2691, which we are so far, then this could just be a liquidity sweep before making the actual attempt at pushing higher. Now, this gets a little bit more complicated when we have earnings coming up next week, which should obviously be bullish or bearish. But from a technical perspective, this hasn't failed my setup here. And again, the risk reward here is pretty solid. I'm only risking 2% downside for this first price target for 12% upside. So I've got 4-to-1 risk to reward just to hit my first price target, or technically my second, because this is like my confirmation level. So risk to reward here is still phenomenal. It's a matter of as long as this base area can hold. Again, that 50 MA, so right at 2698, and your POC 2691, which we're testing literally right now. So if you don't have a long in PRGO and something you want to consider and you like the risk, consider it here is not a horrible idea with a 2648-ish stop, 2640 stop. Decent risk to reward. Again, even to this first take profit spot, a very, very solid trade in my opinion with this flat top breakout. Again, a failed break so far, but if this gets a recovery in the next few days here, 2 to 3 days, this could just be a liquidity sweep before pushing much, much, much higher. So keep an eye on that. Wow, I didn't know when I stream on Kick and Twitch, I'd start getting bots in the chat. So that's annoying. I'll have to fix that. So hopefully that helps, TD. And let me guess, TD, are you Tom? I'm going to just take a guess. Just context clues. I'm assuming you're Tom. Let me know if I'm right or wrong, because I don't just call you Tom. Because if you're who I think you are, then you're Tom. SPY right now tapping this support here. My LOI at 638.04. I actually might open a long here. I might open a long on SPY. We might take a SPY day trade. Let me take a peek at something real quick. Let's see if now is a good time to take a long. And then we're also going to check 0 DTE IV on SPY to see if that IV is increased, decreased, where that's sitting after yesterday's events. I might wait because I think it's iffy. I'm going to wait just because of how much profit taking we're seeing on the Qs, and this is a little steep. I'm going to wait. In this range, it's a decent support, but if this support breaks, we're more than likely going to get zapped to this LOI down here at 636.15. There would be a good spot for me to take like a 1 DTE on the call side, or maybe a spread. But if not, I'll be patient and I'll pick my spots here very cautiously. Let's check 0 DTE IV. Okay, IV is still elevated. IV is pretty, I mean, it makes sense. We gapped it to a new all-time high. Microsoft and Meta blew it out the water. IV percentile is at 15.4. At the money, IV is at 22. So IV is elevated here. So market is a little bit more volatile than it has been on a rolling 52-week basis. Now, that hasn't been the case the last few days. This is a new case, probably coming off the back of FOMC, that aftermarket push, the pre-market trading, and now this. And obviously people taking profit. Makes sense for having 0 TTE IV increase a bit. Okay, cool. TD is Tom. Noted. Could have taken a long there. Looks like it might have worked, but rather play it smart, not risky. It's looking like that 15 area. This 15 on UVXY we should stay under it. Like I said, I was expecting to get a pin under 1550. What I'm looking for actually on UVXY is a little bit of an expansion. As I say that, it just popped up. I want a little bit of an expansion on UVXY because I want a little bit more volatility to come into the market, and it would actually make a lot of sense with Microsoft and Meta, and now Apple and Amazon after hours. It actually makes sense to see volatility actually expand a bit, which this is one of those scenarios where we don't necessarily have a one-to-one relationship on the SPY and on volatility. This might be one of those scenarios where volatility can actually increase while the market still goes up. That's why it's not always a one-to-one. You don't always want to think, oh, volatility goes up, market goes down, and volatility goes down, market goes up. It's not always like that. We might actually see a scenario today and tomorrow where we see volatility at least trend to the upside while the market continues to go up. So that's something I want to keep an eye on and see if that comes to fruition. You get a more clearer read on that midday when things calm down a bit in terms of price action and in general volatility, like in terms of like looking at candles, not in terms of the literal definition of volatility. So that's something I want to keep an eye out for around 10 o'clock. Now, again, we're going to do our segment here. We're going to roll into, we'll probably do This Week in Dumb Money second. Actually, you guys let me know in the chat. We got two segments. We got This Week in Dumb Money. So that's more of like a chill, relaxed segment. Talk about what to do, what not to do based on what other people have done. And then we have Earnings Rewind on Microsoft. We're going to talk about how Microsoft reported earnings, what to look out for, good things, bad things, the indifferent. So what would you like first? If you want to do This Week in Dumb Money first, put a 1 in the chat. If you want to do the Earnings Rewind first, put a 2 in the chat. So Dumb Money, 1 in the chat. Earnings Rewind, 2 in the chat. Let me know what you guys think, and we'll play it by ear. So Dumb Money, 1 in the chat. Earnings Rewind, 2 in the chat. We're doing both. It's just a matter of what you guys want to see first. Let me know right now. I will be watching on every single platform. What would you prefer? As you guys are considering that, keep an eye on the market. I actually want to flip back to our sectors here, and then I'll check the chat, because I know this is on about a 30-second delay or so. Our defensive sectors are pretty flat after the, I keep saying flat. I don't really want to keep saying flat. Let me rephrase. Our defensive sectors are not moving too much after the open. Let me phrase that very carefully. So very calm. Tech, obviously, where the volatility is, obvious sell-off. Looking like we might get some level, the start of a potential reversal here on the XLK. XLRE, so our real estate is looking like it could break and will break low a day here. It's actually looking kind of bearish here. Look at yesterday's candle. Not fantastic and engulfing volume as well. XLB slowly moving up. Industrials at high a day moving up. That's good to see. Healthcare opened down and it's kind of just farting around here, similar to our defensive sectors, which is interesting to see. Banks are looking okay. Discretionary is looking okay. This is going to be volatile again, mainly due to Amazon, and Tesla's going to obviously have baked in volatility. And XLK or XLC is just holding its gains so far from that gap up. I didn't have a single person drop a 1 or a 2, and I've got over 150 viewers. Damn, guys. I'll decide for you then. We'll start off with Microsoft. Not a single, and I know some of you are working, some of you are doing other things, you're just listening to me in the background. So it's all good. Just trying to give you what you want. We'll start off with Microsoft. So let me just pull up my notes here. And we'll keep Microsoft's ugly 1 minute chart here. Maybe we'll just have the daily. That'd be more appealing, right? No, it doesn't look too good either. We'll do the 1 minute. Maybe it bounces back while I'm talking about it and I'll make people happy. Okay. Set that up. Alrighty. So this is Earnings Rewind, when we're talking about what Microsoft did last night when they reported their earnings, how they performed, the good things, the bad things, and what you should look out for long term, whether you're bull, bear, where the risk is, all the things to consider. So first thing we're going to talk about are the financial results. The most important part about earnings is how the company actually performed. And across all metrics, to be honest, they blew it out of the water. Revenue beat, net income beat, earnings per share beat, operating income all beat. Revenue was up 18% year over year. Net income was up 24% year over year. EPS was up 24% year over year and beat estimates. And operating income was up 23%. So from a financial standpoint, they absolutely blew it out of the water from what it was, at least from what was expected for them to perform at. Now, when we go, I want to zoom in and look more at how their segments perform. So where the strength may be within their segments. So the first segment I want to look at is productivity and basically their business processes. So like Microsoft 365, LinkedIn, Dynamic 365, that sort of thing. We saw 16% growth year over year. Where the most strength actually came in from was Dynamic 365, which is interesting to see. And where the least amount of strength came from was LinkedIn, which I don't know if anyone really cares. I mean, growth is growth. It's good, but I don't think people are investing in Microsoft for LinkedIn. Just my opinion. What I like the most and what segment I'm really interested in, and I'm sure the stock market is why we saw such a big pump on it, is in the cloud. Azure, so their cloud services and other cloud services, was expected to hit a 35% growth rate. They hit 39. So they beat the growth rate for specifically cloud computing. And obviously, as we lean into AI, we lean into all things in the future with big tech. This is a huge point for why they actually performed so well. 26% year over year, brought in $30 billion just through their cloud business, which is bigger than some companies, a lot of companies on the stock market in general. Lastly, last segment, personal computing. So you have Xbox, search and advertising, and Windows OEM brought in 9% year over year. I actually was really surprised. Their search and advertising brought in 21%. So they might be picking out of Google's pocket just a little bit. It's pretty good. And Xbox brought in 13%. Windows OEM and devices only 3%, so nothing much there. But overall, through all the segments, really solid numbers. Like I said, the big thing to keep an eye out for, so long term, if you're investing in Microsoft for the cloud or for the growth aspect, the AI aspect with Microsoft, you're going to want to keep an eye on Azure. If these Azure numbers miss in general, the company's going to take a huge hit in stock price, right? When you have this evaluation, and we'll talk about this in a little bit, you have to have sustainable and continued growth. People are pricing Microsoft at a premium right now because it's growing at a premium, right? It's growing at an extreme rate. So people are pricing it like that growth will continue. If that growth slows down, even if it's still really, really good, if that growth slows down, the stock price could take a hit. Risk factor we'll talk about in a little bit. But before we do that, I do want to talk about the things that are really, really good about Microsoft and this earnings report. Azure, again, we just touched on that, is hit $75 billion in annual revenue. That is insane. And growth was accelerated to 34%, like I alluded to before, and that's year over year numbers, which is pretty awesome. It signals to us that AI adaptation is coming through. People are actually using AI, which is a pretty strong driver for performance, especially in a stock like Microsoft. The other very good thing for the future of Microsoft I want to look at is cloud revenue. So off the same back of Azure, $46.7 billion, 27% year over year, which really shows diversification beyond core business. So beyond Office, beyond 365, beyond OEM, beyond Xbox, beyond everything else. It's showing, and again, that's where the growth could be. And this is actually something that's good, where some people may think it's actually bad. Capital investment, so CapEx. Planning $30 billion in CapEx for the next quarter, roughly looking or scheduling or looking to spend $120 annually, or I'm sorry, $120 billion, not 120. $120 billion annually to expand data centers and AI infrastructure. That's massive. Part of one of the risk segments we'll talk about here is a potential bottlenecking. And if they can actually expand on these data centers and expand on AI infrastructure as a whole, that is going to be massive for their long-term growth in this AI environment, the next evolution of AI, and wanting to be a big player in that market. Now, warning signs. And again, let me make this abundantly clear, because last time I made a video, I talked about some warning signs or risks, and people think that it means it's bearish and it's bad. No, it's not bearish or bad. We're talking about risks. So this is something to consider. It doesn't mean it's necessarily bad. It doesn't mean it's going to hell. It's not the worst thing in the world. But with every trade, you take a risk. So these are the risk things I want you to focus on, or at least keep in the back of your mind if you want to consider a position in Microsoft, or if you have a position in Microsoft. There's some margin pressure. So the Microsoft Cloud gross margins dipped 69% as we see AI infrastructure's cost ramp up. So we're seeing infrastructure costs in general continue to go up. Probably is going to trend that way. So that can cut into margins unless we see that dip, which could actually be a bullish thing, right? If we see infrastructure go down. But for now, infrastructure costs seem to start to go up. And obviously, as Microsoft tries to expand, they're going to be spending more money on infrastructure because they need to in order to grow. Makes sense. That is a risk factor. Cost growth. Operating expenses in general rose 6%. This is mostly driven by the cloud AI business and research and development, which isn't the worst thing because you want a company to be spending money to make more money. So this is actually not necessarily a bad thing, but it is a risk. Some of this had to involve the Activision integration as well. So that could weigh on near-term profitability. Obviously, they're spending money and they might see the return on investment right away. So that is a risk factor as well, but it's not necessarily the worst thing. It's just something to consider, right? Workforce reductions. They recently cut 15,000 jobs. Now, depending who you ask, this is a good thing. Spending less money, that's not bad. Less on labor, good. Can be a bad thing, though, because it could affect morale and productivity of your remaining workers. They may get cut next. They may have fears. Obviously, it's a human emotion part of it. I see it more as a good thing because they're streamlining their business, but still a risk to consider. Again, not bullish, not bearish, but a risk. Capacity constraints. So there currently is a strong demand for Azure in general, as you could see through its growth numbers that I talked about, but it's continuing to outpace its supply, which can result in a bottleneck. So until new data centers come online, they might have all this demand, all these people who want to work with Microsoft, want to use Azure in general, and the fact that they don't have the means to fill those orders, so to speak, right, to fill those requests could actually hurt their profitability just due to the fact that there's so much demand, they can't fill the demand. If you're working at McDonald's and you only have 100 hamburgers and you've got 300 people in line, well, you only have 100 hamburgers to sell. You can only sell 100 hamburgers, right? That's kind of what you could see here with Microsoft. Again, it's not necessarily a bear thing, but it is a risk where the market's pricing in continued growth. If they can't fill that desire for continued growth, that actually could be a downside risk. And obviously, you do have regulatory, macro, geopolitical, competitiveness. These are just basic risks that you want to consider. So obviously, rivalry in AI, new privacy laws, data restrictions, geopolitical issues with trade, etc. These are just various risks to consider. And then finally, the last thing to consider is its evaluation. It's trading at a lofty evaluation. Again, that's not a bear thing. It's just something to consider. If you're looking at traditional metrics, like a PE ratio or a PS ratio, it's very elevated, right? So it could be overvaluated, but that's not necessarily a bad thing because the market is pricing at a premium because it expects it to make even more. So not that Microsoft is a bad investment, but it is something to consider that, again, if that growth does start to get reined in from any reason, it will have a bad time, right? It's going to pull back mainly due to the fact that it is evaluated very high, and those expectations are extremely high as a result. Not a bad thing, but something to definitely consider. Now, the bottom line I want you to think about here, on the conference call, the CFO indicated that double-digit revenue and operating income growth was expected for full year of 2026, even as CapEx growth continues to moderate. So a little bit now, and then hopefully to cut it off there into basically the rest of this year into 2026. So it's a good sign. They're saying that, hey, we're going to be spending money, but we anticipate to make more money down the road. Like, things are looking good. So the guidance there is pretty solid, especially coming from the CFO, obviously the money person, right? You want to keep that in the back of your mind. In general, what I got from listening to their conference call is they underscored continuous momentum. It looks like they're very confident in the momentum to continue the growth rate up, essentially. Didn't really hint at any fears necessarily, especially in cloud and AI, obviously. But there is that caution around increasing that CapEx with execution, right? They're spending more money to execute better, but what if they don't? So again, risk, not bearish, but a risk. The bottom line in general, I think this was a really solid quarter for Microsoft. I think they did a really solid job. They obviously blew it out of the water. Their cloud business is looking good. Everything's looking great. There are some concerns from a risk standpoint in terms of buying at this evaluation that there could be increased margin pressure on their business. They're obviously going to increase CapEx, which to help grow their business, but there's an execution risk there that they need to execute. So if you are considering an investment in Microsoft, or maybe you're already long, these are just things to consider at the end of the day. And it's, again, not bullish, not bearish, but at least a risk factor when looking at Microsoft specifically. The last thing I want to highlight again, because I did kind of glance over it, but competitiveness. So other companies with AI, as they grow their cloud businesses, as they grow their LLMs, as they grow in general, you want to keep an eye on not only that, but you also want to keep an eye on how these companies react to regulatory headwinds and privacy laws. You're going to want to see these companies who are involved in AI and this kind of business react very quickly to these things. Sometimes there could be a disadvantage there with, let's just pretend that Amazon or Google, and there's this new privacy law that comes out or whatever in the EU, and Amazon and Google reacts just like that. And for some reason, Microsoft drops they drag their feet or whatever for 4, 5, 6 days, 7 days, however long. That could leave the door open for market share to actually be stolen, because maybe Microsoft can't operate for X reason because they're not following whatever privacy regulation. They get a fine, whatever happens, right? So these are things to at least consider both in the near and the long term. With all being said, put a nice little bow on it. Microsoft blew it out of the water with a fantastic earnings. Is the future golden for Microsoft? Well, that's to be seen. What do you guys think of Microsoft's little earning rewind? Lots of good. Nothing bad, but decent risk. I think that sums it up. If I could sum it up in a few words, I think that's how I would sum up how Microsoft did this earnings. Do you guys agree, disagree with what I had to say? Let me know in the chat. I know a lot of you have feelings about Microsoft. I already seen it on social media today. I've seen it everywhere. There's some people with very strong feelings about how Microsoft did, both good and bad. Meanwhile, checking in on the market, IWM getting a nice little rally here. Can we get back to the tattoo level? Again, it's a far stretch today, but only $1.50 away. Possible. Q's looking weak. Not a lot of strength in the Q's comparatively. SPY basically at the open price, right around there. Keep an eye on that. Guess kicking myself for not taking that long, but it is what it is. It's okay. I will make money another time. VVIX sitting at 93 right now. It's pretty flat on the VVIX. Volatility, big rejection out at 15 on UVXY. And regular VIX sitting at 15. So our volatility is pretty stagnant here. NVIDIA actually had a little bit of a down move there. Looking like it's going to get a little bit of a rally here. Or may try to get a rally here on the 5 minute if it can break basically this localized high here. Meta... Out of kick for kicks. Let's see, what are those 800s worth? $2.15. These were $5 when I took a peek earlier. All those 800 calls were $5. They're now $2.20. Nuts. 50% loss if you got in on those calls, basically at this high. I think that's when I was looking at it. Yikes. Interesting. And Microsoft is not having good luck holding on to this rally so far. I bet you this daily candle looks gross. It does. It's going to be insane if this closes the gap today. If it just grinds all the way down, that's going to be absurd. Google trying to build some level of strength here. Apple is farting around. It's got earnings after hours, so not really getting much price action on Apple pre-ER. Yeah, it's looking like your Mag 7 is actually carrying a little bit of a weight today. Not getting a lot of strength here in general. Interesting. So I guess now would be as good of a time as any to maybe roll into our next segment here. Just curious to see if Meta can bounce here or not. Debating. I like those Meta 800s. Make a 100% gain just getting to high a day here. And there's a lot of volume on them. Yeah, I'm going to grab some Meta 800s. All right, I'm long the Meta 800s. I have a 207 average. So we'll keep an eye on that. I'll add it to the watch list. I guess we'll watch it right now. And then we can pop over to our next segment here in a sec. So let's keep an eye on the chart. I've got the contract up here for you guys to watch. Again, I have a 207 average on those calls. Essentially what I'm looking for here, you're making higher lows. You're getting really condensed here. Looking for basically to make a new high as you form a little bit of a downtrend here, and looking to defend the lows. So keep this one on a tight leash. If this sinks like $1.80, it's probably going to fail. Use about 780.75 as your trigger, essentially the high of this candle here. Breaking that, you should get a nice little rally. 783, 785-ish. Currently, obviously very high in IV and whatnot, so this is going to be a little bit more of a momentum play. You got about an 18-cent delta on these, so you're looking for about a $5 move, assuming no delta appreciation on a $5 move will give you about $1, so about a 50% gain or so, assuming no delta appreciation. So looking for anywhere between 50 to 100% on this trade. So we'll hang out here for a minute and see if Meta can pull one out of the bag here on a nice little ER dip play. This trade would need to move pretty soon, though. It would have to get the let out of its butt here pretty quick. At the POC here, you just wicked the 50 MA as well on the 1 minute here. Your MACD seems like it's going to curl here. Decent bold momentum with a 51 on the RSI. So a lot of good things here. If we can break this trigger here, like I said, 780, I'll call it 780.70 for simplicity. You're more than likely going to get a nice pop here on Meta. About $1 away from that trigger. That POC on this right now, 779.26. So that's where the most volume on the day has been traded on Meta thus far. There we go. We're near the trigger. 10 cents off on the trigger. All right, we're at the trigger, so I'm going to take a little bit of a trim here momentarily. There we go. All right, took a trim here for 16%. Nine times out of 10, I always trim on a trigger test. Trigger test is where that's an area, it's a make or break, and if it breaks, I'd rather sell into that momentum than kind of wait and see what happens. I want to realize some of my profit, obviously. I might actually shave a few more off here. Yep. Just shave a few more off here. It's 25%. Sorry if you hear me click-clacking. I'm talking to our members in our Discord right now. All right, trim again. 43% gain. Next trim will be runners. Add a stop loss at break even. Looking to breach over $3 on these contracts. Basically break this high here if I can. There we go. Nice strength. There's your $3. All right, gonna take runners or go to runner size here. 48% gain. All right, stop loss at break even. You're good to go. Break a high a day here. You could get a nice rally. Stop loss at break even. You don't lose any money. You win either way. Not bad, right, guys? Nice little quick one for you. Cool. Nice and easy. Easy peasy. I love the when I can find a nice day trade opportunity for you guys while I'm on stream. Love it. That way I can actually talk you through it. You see what I see and you can learn from it. That's what I like to do on this program. I like to say things you guys can actually learn from. Not just be like, oh, let's follow him. No, don't want anyone to follow me. I want you to make smart decisions. When you make your own decisions. And if you are just watching, you can at least learn from what I'm looking at, right? Not too shabby. So I'm going to watch this just for another minute or two to see if we break that high. If we do break that high, I'm going to want to watch my runners very closely. But there's a good chance that we reject here and make a double top. Tech is weak today in general. And obviously we're going off the back of an earnings, right? So that was a very good risk to reward trade to take. And now we have really solid risk for a continued upside push if there is one. Now we are up 13% on the day, so stay balanced, right? That's why we have a stop loss on. So we don't want to lose money at this point. And I've realized the lion's share of my profit, I made the most gain, right? I'm in runners, I'm in light size. If you're in a small account, you're under 25K, probably walk on it or move a very tight aggressive stop. That way you're not losing any money, you're not leaving money on the table, because the most important thing, especially if you're in a much smaller account, is to consistently build your wins, stack those wins over and over and over again. You have more money, right? That's what you want at the end of the day. And when you have more money, you can make more money. It makes it way easier. Trust me. Eddie, dropping the GGs in the chat. Love to see it. And Annette says, thank you. Oh, thank you. You did all the work. You pressed the buttons. I just said a bunch of words. You did whatever you wanted. I just said things. You decided, and if you wanted to do any of those things, I just said them. So like I said, we'll watch another minute or two, because if it respects the 8 EMA here and we break that high, I want to keep an eye on this because it could be fun to watch. It might get a nice little push here. But again, don't get too far ahead of ourselves. We are up about 12-13% on the day. Keep it realistic. Stay grounded, right? This is an $800 call, so it's $20 out the money. Stop loss on would make the most sense. You want to stay calm, cool, calm, and collected, right? Don't get too ahead of yourself. So we'll watch this for 2 minutes maybe, unless we get that break. We'll keep an eye on it right away. But then we're going to roll into our next segment, which I'm already forgetting the name of because it's brand new. Check my notes. This Week in Dumb Money. I knew what it was about. I just forgot what I called it. This Week in Dumb Money, we're going to focus on things that were good and bad done by retail investors that I found across the internet, mainly focused on Reddit this time, and bring them to you and see what we can learn from them. And again, for bad stuff, I'm not trying to take a poo-poo on anyone's head, so I hid as much information as I can. And for the good stuff, well, we congratulate them. I can show their names, whatever. Good for them, right? So we'll get to that in a minute because it looks like I'm about to get stopped out. Maybe. You know what I'll do? We'll look at this. We'll look at the overall market here, and then we'll come back and see if I get stopped. And I got the trade up here, so we can just keep an eye on it. SPY looking like it's rejecting the open right now. Ew, getting a little slippery there as I'm talking about it. Basically a double top off the open price, and now starting to push a little lower here. Qs, that's why I said there is not a lot of strength in the Qs, which is probably fueled by profit taking, all things considered, because you are up almost 1% on the day. Like, it's not crazy, but a lot of this is going to be profit taking. And IWM is, ironically, even though gapping down, it's looking like where the market is trying to find strength. It's trying to find strength here. Oh, I got stopped. All out. Solid trade, though. Hatchet says, GG. Good game, good game, good game. GG's in the chat. Good game. Good game. All right. Let's roll into our next segment here. Let's see if I did this right. I did do it right. Alrighty. So this is This Week in Dumb Money, where we look at things across the internet to kind of get an idea of what people are doing good and what people are doing bad. Now, for the things that I consider bad, I'm going to try to hide their names, and not, obviously, I don't want anyone chasing after them. But for people who are doing good, congratulate them. We'll share their username, whatever. If you want to go follow them or whatever, you can. This week, mainly focused on Reddit, which in general is a cesspool, especially for investing. But I thought it would be nice to look at Reddit, as I know a lot of people have come from Reddit in general at some point or another, so you could probably relate with this. Now, this post is titled, Trading Same-Day Expiring Contracts Using My Entire Portfolio Every Day is Giving Me a 100% Win Rate. Now, this individual full ported every single trade, every single day, and has done really well. Really well, actually. Look at this is a ridiculous chart. Up 600% in the last 3 months. Just full porting over and over and over and over. Now, I don't know if I need to really say this, but full porting obviously comes with a lot of risk. For this particular individual, they realized gains somewhere between 4 and 6% on all their trades. So it was a very quick in and out for them. But this graph is ridiculous. Basically, they started with about 20K. They lost it all, essentially, and then decided, hey, I'm just going to full port it and take baby gains. And it worked for them. God bless. I don't think I need to highlight why you probably shouldn't consider this strategy. Now, if you wanted to do a little fun challenge with $100 or whatever and just kind of do that every single day and replicate this by any means, go ahead. Obviously, you're taking an insane risk when you're full porting, but I would not do it with all of your money. It's probably insane. And for this individual, This is someone who I would classify as someone who doesn't know how to take profits, essentially, where you've lost money and you get a win and then you don't do anything, or you over leverage and then you lose money and then you get a win and you don't do anything and you lose money. And it's a very sad cycle for a lot of people. And unfortunately, all time, which I don't know how long, it says at least over a year, this individual only made about 6%. And I can tell you, that's not even the bad part. The bad part is the pain. All of this, the mental torment, sucks. It really, really, really does suck. And hopefully by watching this program, we can kind of minimize that learning curve. So I don't really, if your portfolio looks kind of like this isn't the cure. What the cure is to more of have a steady line that increases. This is an insane move. And hey, congrats. I hope this person doesn't continue doing this forever. I can't really spit in their face and say they're doing something bad. They made money, God bless. But I wanted to at least highlight it because this is where taking a ton of risk can make a lot of sense, but you have to at least acknowledge the risk of, hey, this can get to be a very heavy weight, especially if you started with whatever, 10K. Ultimately, it looks like he started with about 10K. Over time, it looks like he deposited more and more money. It's not going to feel good when you're putting 10K on the line, then 20K on the line. And now this time, if he's still doing this, you're putting 70K on the line every single day on a 0 DTE looking to make 4%. That's a lot. If you're full porting, and that's a lot of money in general, that's a lot to have on your conscience. And it's probably going to get way harder from a psychological point of view when you get to this point. So things to consider. Next on This Week in Dumb Money, this individual said, farewell, deleting Robinhood and Reddit. And unfortunately, this is a tale all too common where at the height of this trader's career, I guess you can call it, they actually made, they started with about $5,000, so they doubled up. They made almost a 150% gain, 167% gain at the peak. Had to start drop, gain back some of it, and then they just lost it all. Obviously dropped all the way down to $178. It's really unfortunate. The reason why I'm bringing this up is the way that it gets like this is desperation. So here you get a little reckless. When you see sharp spikes in your portfolio, so if you're trading and you're looking at your own personal portfolio, unless it's a balanced risk, meaning you took 5% of your portfolio and you put it on an ER play and it blew it out of the water and you had a fantastic trade and you, as a result, have a big spike on your portfolio, you should not be seeing consistently 5% plus swings on your portfolio. Now, that may seem crazy to some of you, and this is a hill I will die on. If you're seeing over 5% swings on your portfolio daily, you're over leveraging in general. And that's how this kind of happens. When you get to this point down here, where you start to stagnate and you're maybe losing a little bit, this is where you get to desperation because you get underneath where you started and you start getting a little desperate. You make a crazy play, one or two or whatever, it works out. You think it can continue, and then you get to the death note. You go all the way down. So in general, I think what I can pass on, what you can learn, unfortunately, from this individual's shortcomings is when you are over leveraged on your portfolio and you have a portfolio gain over 5%, especially if it's consistently, you're either killing it with your risk managed very well, or you're over leveraged. And I'm going to bet 99% of the time you're over leveraged if you're getting 5%, either wins or losses really, but back to back to back to back, you're probably over leveraged, and you want to diversify that a little bit more just so you're not putting so much money on the line, because this is a symptom of what happens with most retail traders where you kick it and you kill it, you make 20K and you give it all back. And you don't want to be that kind of person. You don't want to give it all back. I thought this was funny, so I brought it up anyway, and these are the classic FOMC memes, which I love to see. This note down here is always my favorite one. The first move is always fake. The second move is fake. The 50% of the time, the third move is real. People focus so much on FOMC in general, and we had a little prep session yesterday for FOMC. These are typical memes that we see in general with FOMC. For a lot of people, the best thing to do around FOMC, not trade, right? But funny meme, and I think you should still meme it every once in a while. There's nothing wrong with that. Now, this is someone I'm sharing here because they actually did something that I think is not a bad idea. This individual considered buying leaps on options for companies that are below 52-week highs that he really liked, that were about 50 or 60% out of the money, as you can see, you can read here, and 2 years out. So he's buying leap contracts instead of just buying equity on a company he really likes. In this case, AMD. You got 80s, 100s, and 160s, and it's killing it, right? 200% gain, This one's only a 2% gain, but 47% gain. I don't hate this. This is actually decent risk to reward management. You are saying you're taking a proxy long on equity, but with a little bit of leverage, right? When you buy calls so far out I shouldn't say out the money, so far out in time, right? As long as your Greeks are pretty good, this isn't a bad idea. You can actually leverage your gains this way. Now, obviously, you have to be smart about it, but the other hidden thing here with this particular trader, and I don't know if he's doing it, but something you can consider, is you can sell calls against these. So as these move into the money, especially if you're 2 years out, you can sell poor man's covered calls and make even more money while still riding your original call position, which is fantastic. So this is something that I actually like quite a bit. I think this is a solid strategy. It's not for everyone by any means, but this is a strategy for some of you to consider on companies you really like. I personally think if you do take a leap, unless you're planning on more of a shorter term move, and by shorter term I mean, again, when we're talking in the grand scheme of leaps, a shorter term meaning 3 months or less, that's the scenario where I'll buy a 1 year leap. I prefer to get 2 years out, or at least in this case, like January 2027, a year and a half, whatever it is, because I want the most flexibility as possible. And typically the cost between a 1 year leap and a 1.5 year, in this case, leap, yes, it's going to be more, but the same strike is marginally different, where you're taking on a lot less risk. You're buying yourself, in most cases, like 6 more months of time, which gives you a lot of flexibility. So you may pay a little bit more, but I like that quite a bit. This is a solid strategy. It's not for everyone, but something that you could consider with your investment portfolio. And lastly, this is when earnings bets go wrong. Now, I will say that I made an earnings bet on Microsoft. I took a call credit spread. Each spread roughly cost about, or I earned, what I had exposed was roughly about $50. It was a $250 spread. So I was risking basically a 4-to-1 risk. For every spread, it was about $50. I stood to gain about 200. I lost, right? They reported earnings. It blew it out the water. They did a fantastic job. Great job. This is what happens when you play earnings and they don't go against you. Because sometimes they don't go against you. I lost a little bit of money, but I didn't blow my portfolio. This guy, I feel so bad for. So he decided to take 600 Carvana credit spreads and 24 350 puts on Carvana. This person has almost $300,000, or I like to say a house, in their portfolio. Depending on where you live, that could be a shed. But has a house in their portfolio. They've been killing it. Look at this. Up 600% on the year. Insane performance. Well, Carvana pushed up, and actually we'll check on their price right now. Actually, let me take a peek right now, because I actually don't know. I haven't checked it since it opened. Carvana right now is trading at $405. High a day was $413. So Carvana up considerably a lot more. These are worthless. These credit spreads are dead unless it eats a bullet like later today and really gets fired to hell. These are dead. These 350 puts, he thankfully has a month on them, so there might be some salvaging here, but they're going to get fried pretty good. In fact, let's see what these 350 puts are worth right now. 829. So the 829 350 puts are currently sitting at $4. He spent $35, assuming that's the value. He might have spent more or less, but they were worth $35. They are now worth $4. He's lost about 90%, 80%, 90% of that original investment. So many people in retail, and this is how we're going to end up this man, I'm stuttering. Because this actually really bothers me. There's so many people who get really lucky and they do a really good job, and they actually make a lot of money. And dumb, short-sighted decisions like this make them lose money. So many people get caught up in the allure of making fast money. That's why everyone's here. You're watching this program because you want to make money. You want to know a good investment from a bad one, right? Of course, we all do. I would love to take $1 million and turn it into 20 million, 40 million, 500 million overnight. Who wouldn't, right? But that doesn't come without risk. When you have 6 figures in your port, 7 figures in your port, 8 figures in your port, it is very, very, very easy to make a sustainable living. Very easy. You could make 1% on the day and walk with a ton of money. A ton of money. Keep in mind, what is the median income in America is, what, 60K, 50K, 40K? To work for a year, and you're sitting at that kind of size portfolio, and you can make that in a day, in a week, whatever it is. At the end of the day, it's greed. You could be consistent. You could nail it out of the park. You could have a 99% win rate Every single trade, you nail it, you make 100% gain, you've done this, you've made 600%. You only need to slip up one time. You only need to make one mistake like this. One mistake where you go a little bit too heavy. And if you're watching, I'm sure you've been there. I've been there. I've done that. Sucks. It's the worst feeling ever. But you just need to make one mistake one time. And you do that, you could lose it all. It's the worst feeling. And if you're watching this program, I would prefer you never feel that feeling. So if there's one lesson to take away from today's This Week in Dumb Money segment, it's this. Please be smart with your diversification of your portfolio. Make smart decisions. Don't be blinded by the allure of quick money. Yes, you can make quick money, but limit your greed, right? Instead of trying to make $1,000, maybe you try to make 10, 20, 30. Is that not as attractive? Of course it's not. But is it sustainable? And that's the question you should ask yourself. What do you guys think of the new This Week in Dumb Money segment? You guys like it? Dislike it? Whoops. Boop. There we go. What do we think? Hell, great example right now. Here it is, live in living color. Those meta calls are now worth 141. And we're just talking about risk, right? I put a stop loss on because I knew breaking the high day would be risky. It's more than likely could be a double top, and I didn't want to get greedy. I had two decent pump candles. I took a lot of profit. I went into runners. And then I put a stop loss on because I don't want to lose money. What did it do? Boom. 4 minutes later, back to my entry, stopped out. Now it's at $1.30. Greed will kill you. If there's one thing you could take away from this program and apply it anywhere, and I promise that mentality will work, greed will kill you. Be patient. I know it's hard. I know everyone wants to be rich and financially free and whatever tomorrow. We all do. We all want as much money as quickly as possible. But building a system that's sustainable and actually makes you money long term, right? Think of it as a business. Because this is the only, I want to call it a job, but it's the only thing, hobby, whatever you want to call it, in the entire world where you could spend a ton of time, a ton of money, and leave with less. Of course, if you're starting your own business, that could be the same case as well. But outside of those two things, it's the only time you could sit in front of a computer in one day and probably lose all your money if you just click a few wrong buttons, which is an absurd thought, right? And that's why I love to try to keep you guys as grounded as possible right here on this program. Wow, I missed my second plug. I should have plugged it before the segment. Gosh darn it. Oh well. Negum says, love it. Wayne says, thanks for keeping it real. You're welcome, Wayne. Hopefully you found that segment helpful. I thought that was a solid segment. Like I said, it wasn't about making fun of people because we've all been there. We've all made dumb decisions. Everyone's on a different part of their learning, right? I've been doing this 13 years. Some of you have been doing it 1 month. Some of you have been doing it 5 years. Some of you have been 30 years, right? It doesn't matter. We're all in different parts of our learning path, but it doesn't mean we can't learn from other people's mistakes. My goal with you guys watching this program and with our trading community is to lower the learning curve as much as possible. You can learn from other people's mistakes, and guess what? You're less likely to make your own mistakes. Consequently, you're more likely to make more money quicker, which is why you're here, right? You want to make more money as fast as possible. That's the goal, right? So in a funny way, you got to flip your mentality. I'm trading because I want to make money as quickly as possible. Okay, how do I do that? Well, I full port everything every day. No, I build a repeatable system that makes me money every single day. Oh, that could work. Because again, as you grow that account, you make more and more money. It's easier to make money. Remember, for $1,000 to make 10%, that's $100, right? But if you want to make $100, guess what? When you have a $10,000 account, that's 1%. So as you grow, if your goal is still that $100, right? Now if you're at $100,000 and you still want to just make $100 a day, that's it. Whatever your goal is, now that's 0.1% gain. Sorry, yeah, 0.1% gain that you would need to achieve your goal, right? It makes it easier over time when you're patient. And that is a hard lesson that I had to learn the hard way. And I hope by sharing my pain and sharing others' pain with you in an educational setting, you guys can benefit as well. Eddie says, random question. When selling options, are you normally doing it at market fill or limit? Eddie, that's a fantastic question. Few things to keep in mind with that. For every buyer, there has to be a seller. you want to keep in mind your bid-ask spread. So for example, on Meta, we actually have a tight spread. But if you're trading something like Costco, let's see, where the spread's a little wider here, you got 40-cent spread. If you're doing a market fill, you could lose, like 10% here because you're just doing a market fill. You want to get out, which means it's going to fill at the bid. So you're going to lose the opportunity to make whatever, more money, right? So it is situational, Eddie. There's times where, most times I do a limit order. If I want to get out really quick, that's when I do a market order. So for example, with my stop on Meta, I didn't want to take the chance. So that was a market stop for the 207 stop. Sometimes you can do a limit stop. There's nothing wrong with that. But when I'm picking a more volatile name, I especially want to do a market stop because I want to get out no matter what. So I might lose a few bucks here or there in flux. But the risk of doing a limit order and it falling right through or just not getting filled, sometimes you'll see the bid ask fall so quickly that a limit stop may not execute. And same thing with if you want to get out to you want to sell, right? If you're long, you're buy the open options, you want to sell them, you may not got to fill on a limit. There is a happy medium when things are calm. So if you're trading a stock that's like grinding up slowly or grinding down slowly, depending on what side of the trade you're on, you could take a limit order. And if the spread's wide, like let's say there's a 20-cent spread, you could shoot for the mid or the mark. And then if you want to get out pretty reasonably quick, but you also want to retain as much profit as possible, shave off your fill by like a penny or 2 pennies. So there's times where I want to get out of a name that has a wider spread and I want to get out pretty aggressively, but aggressively in the sense that I want to fill within like the next 10 minutes, not that second. So I will put a limit order. If it doesn't fill, okay, chop a penny off, chop 2 pennies off, whatever, depending on the spread, obviously, to get the best fill I can while focusing on my time of getting out of the trade. So it is very situational. So it depends. Depends on how desperate you want to get in or out of a play, right? If I want to get in right now, then you're going to market fill. If you want to get in, you want to scale in, then you could limit order scale in. If you want to get out or limit order scale out, limit order scale out. So there's not one shoe size fits all. If I had to say 90% of the time I'm limit orders. 10% of the time I'll do a market. So I think that would be good. A good barometer? Yeah, pretty good barometer for understanding. 90% of the time limit, 10% market. If I'm trading SPY zeros and like let's say I got in down here and we're getting like a pump candle and I want to sell into that strength, I might take a market order to just get out trim depending on my risk, right? Depends on what time of day it is, especially with a 0 day. Do I have 30 minutes left on the contract? Do I have a 5 hours, right? It just all depends. So it's too situational for me to give you a blanket answer, but my personal opinion is to mainly focus 90% of the time on limit orders and 10% of the time on market orders. I'm starting to notice, and maybe I need to drink a polar every time I'm live, that when I don't drink water, I just trip over my tongue because I'm here talking to you guys as quickly as I can while I'm processing thoughts and trading for an hour and a half or so, and I just like continuously trip over my tongue like a banana peel in Mario Kart. Anyway, let's take one more look around the market, and then I'll probably let you guys go. Normally around now we wrap things up. So unless you have any other questions, if you want to drop them in the chat, I'll get to them, assuming they're not 20-minute long questions. So if you have a question, drop them in the chat right now. We'll address them. Otherwise, we're going to look at our sectors real quick, look at the market outlook for the rest of the day. We'll bang through some of our Mag 7, and then I'll let you guys on your way. So that way you're set up pretty good for the end of the day, and you actually know what to look forward to. So sectors, XLU actually got a nice little rally here, now green on the day. Energy also green, so this could be a warning sign, and consumer staples pushing green. This could be a warning sign that the market's flipping defensive. Remember, these three, you want to always bundle them together. XLU, XLE, XLP. These are your like more defensive sectors. When you see these sectors push green, and with the exception of consumer staples, which is moving green, trending green, and you see tech move red, which in this case, it's down to red, still up on the day, this is a sign that's typically indicative of defensive posturing on the market. People are rotating their money defensively. So we could see some profit taking out of XLK today and into more of these defensive sectors. So that could be a risk factor for you today. So be mindful of that. That leans the day's favorability a more bearish direction. Again, that's just one piece of the puzzle. XLRE pretty flat off of the open, kind of farting around here. Materials, not much to see. Industrial's pretty strong. Nice move up, pushing down a little bit, building a little bit of a base here. Might get another push here on industrials. I don't hate that. Healthcare flat off the open, nothing too crazy. Banks have actually been pretty strong too. We said that earlier. Building basically kind of like a little bit of a double bottom here and might get a little bit of a rally on XLF. Consumer discretionary is going to have a little bit of volatility. Not much of a move here though on the day. Remember, Amazon reporting after hours today. And XLC at the lows of the day, but still up about 1.5% on the day. So in terms of intraday, not really going too much of anywhere from an intraday perspective. Lastly, let's swing over to our market outlook here. Okay, Hatchet, you have a pretty good question. Hatchet said, going back to the meta trade, could you go over again what you saw in the setup and what caused you to take it? So let me start with this. When you take a trade, you want to know what gear you're in. And I say it all the time in our community, you want to be able to shift gears. Sometimes you're in first gear and it's a long-term trade, you're going slow, it's a swing, whatever, right? Sometimes you're in fifth gear, right? Or like a 0 DTE, you're looking for a 5-minute trade, 10-minute trade, whatever, that could have legs to go further, right? So depending on what gear you're in, it's going to structure the trade. In this case here, I'll draw you some sloppy lines real quick. Let's go like this. Nope. Wrong button. Let's do that. Downtrend. Kind of a dirty little uptrend here. I don't like drawings at all, but I like price action. I don't like drawings because they can give you, what's the word I'm trying to look for? I almost want to say false sense of security. They can give you false signals, right? When you draw, oh, this is a flag. Oh, this is a whatever. There's drawings I love. The drawings I love are a flat top breakout, a cup and handle, and a head and shoulders. Those are the three. Everything else, kind of BS. But in this case, works out. I'm mainly looking at the price action here, which is why I drew these. Let me hide that. I drew these so you could see it a little bit clearer. You're making lower highs here, which is typically a bearish thing. However, this is also coupled by higher lows. Higher low, higher low, higher low. Arguably a higher low. Kind of just built a base here as the highs compressed here. The other thing I was looking at is our MACD. Our MACD started to try to curl up here after we had a sharp aggressive push here. So I'm looking at people who are at the open, sold some profit takers, people went aggressively bullish, and we hit a high, and then we saw this kind of price action, which is the market trying to evaluate what meta's worth, right? It's price discovery, and that's kind of what this price action, these are 1-minute candles, is indicative of. You're making lower highs, like I said, arguably higher lows, depending on what you're looking at here specifically. And what I was looking for is our MACD and our RSI. Now, I hate RSI, how you personally at home might be using it, and how most people use it. I hate it. I hate it because saying something is oversold or overbought is silly in my opinion, because something that can be overbought can continue to be overbought, and something that's oversold can continue to be oversold. What I like about RSI is using it as a momentum indicator. How much momentum is there one way or the other? And at this point in time, you had an RSI roughly around 50. And I like to tell people in our community, my sweet spot for like bullish RSI is anything north of 56. So this was a little early for me. I would typically take a trade, and you can see it. I'm pointing at my screen like you're here in front of me. Right down here, you can see the RSI number update on the left-hand side there. And this is right around where I got in the trade. It was about 50 on the RSI. So it was a little bit of an early stab here, but looking at how the candles were forming, I was betting that we would get some level of a breakout here, and we would see RSI swing with a MACD flip. So we'd see that bull momentum sustain. So it was a little under what I wanted to see, but it was enough to see that even on this downtrend here, the bulls held momentum for the most part, right? Momentum was looking good. It moved from 57, and it basically fluttered around 55, 50, 49, 47, but it fluttered around that range, but still held about a 50. When we got right to here, when the MACD started to flip, big pop on the RSI, obviously big pop on the candles, and obviously here, I was risking high a day. That's where I wanted to more than likely go into runners, and obviously I'm going to sell into strength. I had this trigger level here, which is the localized high of this candle, which was, what did I say, 780.68. So here, let me delete this now. No, delete. So we saw wicks here, wicks here. So we saw liquidity get swept here. We saw bulls tried to break it here. So we had an attempt here that was rejected. Bulls tried again here and rejected. So that's what I look for here, that we had a higher high in this very micro time frame reject until we pushed up. And that's what I was using as a trigger. So getting here long, and again, shifting gears. So this is a fast gear, right? Getting long here, I was looking for that level to crack to get basically a full momentum swing on higher volume, which we got. Volume pop, MACD flip, RSI pop, worked out great. Risked the high a day, went to runners, and you know the rest. That makes sense, actually? That's kind of the whole breakdown of what I did there. Yeah, I don't think I really hid much from you there. That was pretty simple. Sometimes I'll keep certain things to myself, or I won't tell you like all my edge exactly, but that was pretty solid. Also, you had your SAR break here on that attempt at a move that was rejected. So similar when Tom asked earlier about PRGO, and now we're flipping time frames here. When Tom asked about PRGO on the daily, and I said, well, you could come down here and wick out, basically do like a liquidity sweep, flip it on its head, and it's a similar thing with Meta on that short time frame where the trade isn't invalid. We're testing levels before we go the other way, essentially. We're sweeping out the liquidity both ways, and that's kind of what you're seeing here on PRGO, even today, still grinding to the upside or trying to, and that's what we saw with Meta there on a shortened time frame. So hopefully that helps explain that. And look at that. Now trading at $1.15. Great, great, great exit. Great risk, great reward. All good. Anyway, we went over the sectors. Look at the market real quick, and I'll let you be on your way. SPY not really doing too much of anything. Yeah, tech is actually leaning bearish. It might give back the gap today. It might. IWM, I would look for the bulls to push into IWM, especially if we see weakness on Microsoft specifically, because it looks like it's more weak than Meta. But if we see specifically weakness or profit taking on Meta or Microsoft, I would look for the bulls to step in on IWM specifically. So keep an eye on your small caps today. That could be where we see some of the rotation. NVIDIA kind of sitting at the lows, nothing too crazy. Google, I mean, all these charts look very similar, to be honest with you. Apple's actually trying to hold it together. Pre-earnings, it's literally flat on the day, off by a penny. Pushed a little lower, slowly pushing up here. Pretty solid. Tesla not showing a ton of strength. Amazon gave up that gap right at open, now sitting at the lows. This is very similar to Microsoft, very similar to Google. Anytime you see a chart do one of these, so drop down, come up, and then break the lows, you typically get a harder dump if these lows get swept and aren't defended. So from that first flagpole, right, if you call it that, harsh move down, and if those lows don't get defended, so you get a pop back, you get relief, and we've come back down, you form like a lowercase h, like you go, and then you keep going. That is very possible on Amazon pre-earnings. That is very possible. I mean, Microsoft has just been grinding to the downside, actually. But kind of a case here with Meta that if we take out those lows, we make like a crest, like a lowercase n, you could keep going down. So keep that in mind in general. Actually said, yes, also price is wicking off VWAP. I know you don't use it, but it's showing support. I do have VWAP on my chart. It's not that I don't use it. It's just that I think too many people put too much faith in VWAP. Not that it's bad by any means. It's this orange line on my chart. I think one of the most important things for a technical trader is to keep a bunch of lines on the chart that everyone else has on their chart, because guess what? All the other algorithms and all the other computers and all the other people are looking at the same exact lines you and me are looking at. So even if you don't personally like it for whatever reason, at least having that data, if you're a more analytical person like myself, can help you make better decisions. That's kind of one of those cases there. Anyway, guys, that's going to wrap it up. Pretty solid show today. Went a little longer than normal, but I'm pretty happy about the show in general. Hopefully you guys learned something today. Hopefully you made a little bit of money, and if you didn't, hopefully you learned how to not risk as much. And don't forget, tomorrow at 9:15, we're going to do another show to wrap up the week and kind of send you on your way for the rest of the week pretty safely. Good. Well, we'll have a good time. We always have a good time right here on the Atomcash angle. And like I like to say, some say you will need an edge to trade. Well, I like to look at things from a different angle, and that is always what you'll get right here on the Atomcash angle. I hope you guys have a great rest of your day. And remember, precision beats prediction every damn time. I'll see you tomorrow at 9:15.
The time has passed, and that's a wrap.